South Korea was established in August 1948 in Seoul, and it makes up about 45% of the Korean land. Its economy is based on services, manufacturing, and also high-tech industries. The causes of 1997 Asian financial crisis was corporate overinvestment, exchange overvaluation, and highly vulnerable financial structure. Overinvestment was financed largely by short-term debt that led to corporate insolvency, which in turn rapidly increased banks' non-performing assets. It was facilitated by economic liberalization. The problems of the financial structure lay in the distorted incentive structure, which encouraged overexpansion of corporate investment and misaligned relative prices, especially the overvalued exchange rate, and political democratization rapidly raised real wages. With wages higher than labor productivity, lower profit for companies led to an asset inflation. There were two phases in the 2008 global financial crisis in South Korea. The first phase was caused by loss of credibility when the Lehman Brothers fall. Before the brothers' fall, equity capital flowed out continuously. After their fall, banks in advanced economies withdraw funds, particularly Korea. The severe liquidity strain resulted to sharp depreciation of exchange rate and drastic increase in credit default swap or CDS premiums. Loss of confidence in investors played major role in the crisis, and also the fact that South Korea was highly dependent on large and short external debts. The second phase was due to the collapse of exports. Since Asia heavily depended on exports to advanced economies, it became a crisis when the global demand declined due to the high debt and loss of confidence in the whole of East Asia. This affected South Korea because elastic goods and durables were a major part of their exports.
So, we move to the impact of Korean financial crisis. First is rise in unemployment rate. Due to the Korean financial crisis in 1997, the unemployment rate rise by more than 7%, which is more than 1 million on that time. However, after economy recovered in 2000, the unemployment rate decreased rapidly and the number of jobless people was 200,000 people in Korea will still not work. Next is decline in nominal wages. In the third quarter of 1997, the nominal wages was dropped by 8.1% and the real wages plunged to 14.2%. It revealed the level of hardship Korean workers experienced throughout the year following the crisis. So the nominal wages reduction in 1998 has never happened before of the Korean economic history since wage data become available. Real income decreased by 23.7% and nominal income by 17.2% for those in bottom 20% of earner. Next is weak of corporate governance. One of the main reasons of the severity of the 1997 and 1998 financial crisis was the high level of corporate debt in Korea, and other crises hit Asian countries. It is because Asian companies tend to be more leveraged when investor protection or corporate governance are less strong. So, the solution of Korean financial crisis first is rehabilitation of financial institutions. Inadequate capitalization and low quality assets are the major problem in Korean banking sector. This caused due to the large number of chaebol bankruptcy that broke banks' balance sheet. The balance sheet carried out many non-performing loans. To solve the problem, the government was forced to intervene using public funds. Next is strengthen prudential regulation. In accordance with the conditions set out in the agreement with the IMF, the Korean government enhanced prudential regulation in December 1999 by implementing a forward-looking approach to asset categorization that took in consideration both the past and expected future performance of borrower. Next is strengthen corporate governance of financial institutions. Many steps have been made to improve the governance of financial organizations. They include allowing foreigners to own commercial bank and hold bank executive position in December 1997 and May 1998, respectively, enhancing financial institution governance and bolstering the right of minority shareholders in commercial bank.
The first lesson from the Korean crisis is about how capital account liberalization happened. Korea made a big mistake when it decided to open up short-term capital flow before opening up long-term capital flow. Korea should have known that the short-term capital flow are more volatile than long-term one. Second lesson is that a pure floating exchange rate system is better than a managed floating exchange rate system. Under a managed floating system, trade or current account imbalance can be fixed through the market. Also, in the world we live in now, it is impossible for policymakers to change exchange rate correctly and on time. The third point relates to prudential supervision. Since the crisis, Korea has done the right thing by stepping up prudential supervision, but it needs to be careful about going even future. In the country where the government has been in charge of the economy for a long time, strengthening prudential supervision can lead to more rule that can slow the growth of a strong financial system. The last point is about how much foreign investors trust the country. Both in business and in government, it is important to be open and honest. Without clear information about important economic like foreign reserve and policy direction, people tend to follow the crowd, which quickly lead to situations that are out of control.